The 100-day moving average is now support for any pullback. So any pullback towards that 100-day moving average, that's going to be a buying opportunity, at least here in the short term. Here's what you need to know before the bell this morning. We gotten above the 100-day moving average. We needed to hold that support at the 100-day moving average. We tested it on Monday. Yesterday's rally clearly punching through and confirming that break above resistance. So the 100-day moving average is now support for any pullback. So any pullback towards that 100-day moving average, that's going to be a buying opportunity, at least here in the short term. So continue to buy dips. Still on a buy signal here in terms of our MACD. Very strong buy signal right now. But the market is now back into overbought territory. So we are now overbought. So expect a bit of some profit taking here. Again, I don't know what's going to cause it other than just, basically the market's really gotten pretty far ahead of themselves. We're going to have another potential rally this morning. Futures are pointing higher. But again, we've gone a long way. This is a 78.6% retracement of the entire decline from the June, July highs. So again, we've almost fully retraced that entire decline from the summer just in a couple of weeks here, which is a very, very strong advance. And again, nothing wrong with that. We talked about the extreme bearishness back over here when we were getting down towards these lows. We were talking about here on the show in the morning. Markets were extremely oversold, very bearish. We were going to get a rally. Well, that rally came in spades and again has been very, very strong here. So it's good. Don't forget to take some profits. If you were really stressed out here in the markets during these October lows like I was, this is a good time to rebalance some risk and think about what you want to do with your portfolio heading into year. And again, don't be too bearish here. There's no reason to be bearish here short term, but we are overbought, and so we are going to get some type of relaxation here. It's going to be a slow grind sideways. It'll be a bit of a pullback. Whatever causes it, don't know, and I don't know the timing. Could be next week, could be 2 weeks from now, whenever it occurs. You are going to get some type of a pullback. You can buy that dip for the year-end rally. Now, once we get past year-end, have no idea how this is going to play out. So we'll have to do, kind of work through this as we get there. But again, for right now, use any type of weakness here. Add exposure to portfolio as needed, but don't forget to take some profits. Again, if you're really overweight equities and kind of got ahead of your skis, look to take a little bit of profits off the table for the time being. As I said yesterday, bonds also had a very, very good day. Clearly broke above the 50-day moving average. We have an interesting pattern that's developing in the bond market right now. This is TLT as an example. But you have a very clear left shoulder here ahead and now a right shoulder. So you've got this inverse head and shoulders pattern. And we actually took out this kind of neckline yesterday. So again, it looks like we're starting to build a very clear bottom in Treasury bonds for right now, and suggesting higher prices, potentially about 93 as our first target on TLT right now, over the course of the next couple of weeks. So again, market's looking good, really kind of across the board. Again, no reason to be bearish here right now as we head into the end of the year. That's what you need to know before the bell this morning.